Why 91% of elite economists expect very weak growth in the US and Europe in 2023. Deflation is not a thing of the past. Deflation loves to hide. Deflation comes in surprises. It's like a predator, hiding in the shadows, then attacking its prey. Remember March of 2020? It came in fast and furious. Just in 3 weeks, it can crash the whole market for 30%. Wipe out all of the people that were not prepared. The ones that are watching my channel, you guys will be fine. Because I always tell you to prepare for the upside and the downside. That's the art of trading. Remember who spoke about the crisis triggered the deflationary crash. Yes, the global elites. Why 91% of elite economists expect very weak growth in the US and Europe in 2023. How are they going to achieve "you will own nothing and you will be happy" goal in this decade? I will explain it all right after this. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here, and you know what to do. And push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you are a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get it into the bookstore. You want it to be real. You want it to be true. You need to be my client, don't you? Wall Street has turned a blind eye to the potential for deflation in 2023. But falling prices could end up being one of the biggest surprises to investors this year. With much of the world focused on reining in inflation, it's hard to imagine prices falling so far and so fast that actual deflation registers on the CPI this year. A review of more than 500 Wall Street Outlook notes for 2023 showed not one mention of the word deflation, while words like inflation and recession were mentioned 800 times. The truth is virtually no one is expecting deflation. But this time, 18 months ago, no one was looking for 9% inflation either. 91% of the chief economists surveyed by the WEF on Monday said they thought that a global recession was extremely likely in 2023. For more than 50 years, what's now known as the World Economic Forum has taken place in Davos. And every year, the Grand Hotel Belvedere has hosted WEF guests. Bill Clinton stayed at this hotel at some point. Angela Merkel, Michael Dell, Bill Gates, you name it, they've been here. This year, the WEF is expecting nearly 3,000 participants. Last year's forum didn't have quite the same energy. So we're happy to have the real economic forum back after such a long break. The hotel is now exclusively open for the important guests coming from around the world to attend the WEF until January 28th. We work 24 plus hours a day, barely sleep, and live off Red Bull. But we love it. We have such a great attitude, so much, so we own nothing and be happy. During the WEF, no one will have access to the hotel without their badge. We have X-ray machines and metal detectors, and each and every person has to go through these to enter the building. It's almost like an airport. There are a lot of police officers inside and outside of the Davos. Plus, we have thousands of security people and army members making sure this event is safe and secure. We also built an additional 3 kitchens from where we can deliver food exclusively for hotel guests, elites. Meanwhile, in Main Street, global growth prospects remain anemic and global recession risk high. Companies including Amazon, Goldman Sachs, and Salesforce have already announced layoffs this year. And the chief economists expect job cuts like these to continue. 86% of the survey respondents said they expect multinational businesses to cut operational expenses, with 78% expecting workers to be laid off. Most economists said they expected companies to pass higher costs onto customers too. 2/3 of the respondents said they expected the cost of living crisis to become less severe by the end of 2023. While close to 2/3 said they were optimistic that the energy crisis will have begun to improve by the end of the year. Jamie Dimon, however, forecast in December that Europe's energy crisis would worsen and likely last for years. They said cost of living dominates global risks in the next 2 years, while climate action failure dominates the next decade. Meaning markets will have a deflationary financial crisis crash within 2 years, and after that, the recovery will be sluggish because the Fed don't want to cause more inflation. They won't solve the energy problem with producing more fossil fuels because their climate crisis. But that doesn't mean investors should ignore the possibility that deflation will show up sooner than expected. It is time to utter the D word in polite circles. Apparently, that is decidedly contrarian. For reasons of recency bias, I presume. I can't speak for 2024, but as far as 2023 is concerned, we could very well be in for a surprise CPI deflation. As an economic era ends, the next will bring more risks of stagnation, divergence, and widespread high debt distress. They said the end of the low interest rate era will have significant ramifications for everyone. The knock-on effects will be felt most acutely by the most vulnerable parts of society and already fragile states, contributing to rising poverty, hunger, violence, and even state collapse. Economic pressures will also erode gains made by middle-income households, spurring discontent. Geopolitical fragmentation will drive geoeconomic warfare and heighten the risk of multi-domain conflicts. In particular, in the Asia-Pacific also pose a growing concern, meaning Taiwan-China conflict. Technology will exacerbate inequalities, while risks from cybersecurity will remain a constant concern. For the climate crisis risks, the biggest challenge in reaching climate goals is finding the money. countries can go into sovereign debt when they borrow money. A sovereign debt conversion deal enables governments to convert a portion of this debt into sustainability financing. For instance, in one deal, the government of Barbados was able to transfer part of its sovereign debt service into ocean conservation funding. With 52 heads of state and over 500 CEOs heading to Davos this year, they said that the meeting is the perfect convening to focus on financing a clean energy transition and to phase out fossil fuel subsidies and redirect that money to investments that will help scale green solutions faster. Fossil fuel subsidies are a way for governments to lower the cost of fossil fuels. Often, the subsidies come in the form of tax breaks on either the consumption or production of fossil fuels, such as oil and coal. Global fossil fuel subsidies in 2020 totaled $5.9 trillion. The goal of redirecting fossil fuel subsidies to clean energy is to accelerate the transition to a low-carbon economy and help mitigate the effects of the climate crisis by reducing greenhouse gas emissions, which means they want to keep their pedals to the metal to create higher energy prices and higher inflation, while very weak growth and with higher unemployment rate, which is bringing back 1970s stagflation in the next 10 years with cyber attacks and potential war, which leads to state collapse. Oh, wow! That's how people will be owning nothing and being happy. It's exciting, eh? This is my collaboration book with all my incredible clients. It's already yours, Adversity Equals Success. Such an amazing book with such incredible authors. And my book, Rainbow Focus. You are such a good boy for watching my video right till the end. Bye.